Treasurer Yuan must get to grips with the Yuan world order by Glenda Corporal. Next week's visit by Yuan to Hong Kong and mainland China will provide a welcome focus on the potential not only for trade but the potential from China's policy of liberalizing the market for its currency. If the great economic story of the past 20 years has been the rise of China as a trading partner for the world, the next 20 years might well be about its impact on the world financial system. While Australia has been proactive in expanding its trade with China, our largest trading partner, it has been slower in spotting the potential from Beijing's plans to open up the market for its currency, the yuan. When Australia signed a bilateral currency swap agreement with China in March for about $30 billion, $29 billion, it was the 16th country to do so. China pegged its currency against the United States dollar in 1997, the same year it resumed control of Hong Kong from the British, and it announced in 2005 that it would manage its currency against a basket of currencies, a move which has seen a gradual appreciation of the yuan. China quietly began using its special administrative region of Hong Kong as the base for the internationalization of its currency about a decade ago and has continued with its moves to expand yuan trading through bilateral agreements. Belarus did a small swap deal with China in March 2009, Indonesia did a $15 billion deal at the same time, Singapore did a $22 billion deal in July 2010 and New Zealand followed in April last year with a deal for $3.8 billion. Others to have signed up are Argentina, Iceland, Uzbekistan, Kazakhstan, South Korea, Thailand, Pakistan and this year's signatories the United Arab Emirates, Malaysia, Turkey and Mongolia. The long list is a reminder that Australia might not have quite the special relationship with China that it thinks given the size of our trade, and it is a relationship that needs constant attention to spot the potential from the tectonic shifts underway in the Middle Kingdom. Singapore and London have been pushing for some time to become offshore dealing centers for the yuan as it liberalizes. Japan signed a deal with China last December to pave the way for direct trading between the Japanese yen and the Chinese yuan, which came into effect on June 1. Between former Prime Minister Kevin Rudd's complex and less than uncomfortable relationship with Beijing and Julie Gillard's Obama hugging, Australia has lost some momentum in its ties with China. It has been the private sector led by companies such as ANZ, HSBC, Rio Tinto and Andrew Twiggy, Forest Fortescue Metals Group that has continued to beat the drum about ties with China and now the new potential of doing business in yuan. The Reserve Bank has stepped up its own observation of developments in China and two members of its international division, Lynn Cockerell and Michael Shurey, have published a detailed summary of the progress in the internationalization of the yuan in its June quarter bulletin. They say it is now possible for any trade transaction with China to be in yuan. In the past year, they say, the equivalent of $360 billion or about 10% of China's world trade, was settled in yuan. They say part of the deal struck between Beijing and Tokyo was an agreement by Japan to buy $10 billion worth of Chinese government bonds. If Australia looks to lobby for some convertibility between the Australian dollar and the yuan, this might provide an indication of the quid pro quo involved. And China economist Li Gangliu predicts China will deliver on its goal of making the yuan fully convertible on the capital account by 2015. He predicts that offshore deposits of yuan will by then double from their current levels of about 854 billion yuan, $130 billion, to 1.5 trillion yuan. While Hong Kong has the lion's share of the market for offshore yuan, holdings are rising in Britain, Singapore and Taiwan. It is still a way away, but the yuan is on course to rival the euro and the United States dollar as the third major world trading currency. It will happen regardless of what Australia does, but hopefully next week's visit by the Treasurer will help Canberra regain some lost initiative and step up financial and trade ties with China.